It was a tense day on the Korean stock market. On March 28th, both the Kospi and Kosdaq closed sharply lower, as investors responded to rising global uncertainties and growing caution over short selling and international trade tensions. The Kospi index fell 49.17 points or 1.89%, ending the day at 2,557.98. Meanwhile, the Kosdaq dropped 13.73 points, or nearly 1.94%, closing at 693.76, falling below the symbolic 700 line for the first time in 3 months. Foreign investors were seen pulling out of the market, selling over 640 billion won worth of Kospi shares. Meanwhile, individual investors stepped in, buying over 540 billion won. Similar trends were seen in the Kosdaq, where individuals were the primary buyers, but it wasn't all bad news. A few stocks saw major gains. Wilby's surged to its upper limit, climbing 30%, while Hyunkuk Fire Insurance preferred shares and Daewoo A-Tech also soared by nearly 30%, drawing attention from retail traders. On the flip side, pharmaceutical and defense-related stocks took a hit. Bukwang Farm plunged over 13%, and Hancom Lifecare dropped more than 10% amid investor concerns. Trading volume was hot, with Dongyang Steel Pipe seeing nearly 185 million shares exchanged and rising over 15% in the process. Among the blue chips, giants weren't spared either. Samsung Electronics dipped 2.59%, closing at 60,200, and SK Hynix dropped 3.72%, finishing at 189,300. Elsewhere, the ETF market experienced a glitch with pricing errors, causing confusion among investors. It was a reminder that even in high-tech markets, precision is everything. The currency market reflected the volatility. The Korean won weakened slightly against the dollar, closing at 1,471 near it. The Japanese yen also strengthened to 981.68. And in the crypto space, Bitcoin and Ethereum both fell over 2%, continuing the recent trend of weakness across risk assets. As uncertainty grows from trade wars to monetary policy, investors are being urged to tread carefully. This is a time for vigilance, strategy, and perhaps patience.